Welcome to the Land to Lots podcast, powered by Launch Development Finance Advisors. And now your host, Carter Froelich.
Hello, everybody, and welcome to the Land to Lots podcast. It's great to be before you again here today. And for the second time, we are bringing back to the stage Greg Vogel, the founder and CEO of Land Advisors, also my dear friend and partner. Greg, welcome to the show again. Great to have you back.
Thank you, Carter. It's an honor.
And last time you were on the show, we were dealing with all things land, and we're still going to be doing that. Obviously, you're the national expert on that. But before we get started, Greg, maybe you could tell the audience a little bit about yourself, how you got involved in the land business back in, I believe it was 1987. And then I'd like to share some of our stories together as it relates to LAO's growth and the use of tech, because we just had John Sicilian and Phil Warland on the Sicilian Partners on the podcast last week, and there's a tie in there between Land Advisors and tech and just the tremendous amount of data that's available for land developers and builders. So, Greg, let's hear a little bit about yourself.
Well, yes, it goes back a little further than 87. 1982, I moved to the state of Arizona, go to Arizona State, go Devils. And I ended up falling into the real estate business through an internship, which we still value doing today at Land Advisors. We're working on our new round of, I'll call it summer camp here for kids who want to get into real estate. But it was very meaningful for me. I was 19 years old. I fell into CBRE's, and I was Coldwell Banker at the time. Office. I began researching office industrial property, but ended up researching land. And I saw how arcane it was compared to the database I was working on multifamily. And of course, the office and industrial properties were a little more advanced, but still very arcane. Began researching and noticed the inefficiencies. 1985, I graduated from ASU. I got into the land business, and I began mapping the Phoenix metropolitan area, uniquely putting ownership records into a database. This was before mapping.
Yep.
So that's how it all started. And we had a very good speculative boom, I'll call it, investment period through the SNL run up before the run down, and was able to really outline a lot of the land around Phoenix before the market crashed. 87, I started Land Advisors. So that's the ancient history, Carter.
Oh, that's great. Well, I remember when we first met in the early 90s, you said, I came into your offices in Scottsdale and you said, hey, Cart, come over here and look at this database. And I think it was all driven by Lotus or 123 or Excel if it was around at that time. But yeah, even that amount of data that you had at your fingertips, people can't understand, but that was really the cutting edge back then. You had to go really get it yourself and manage it. Isn't that what basically you did, Greg? And
completely inefficient. It was something where you had to get tax parcel maps and, mine through the data. And of course, there was no internet to search out people. You had reverse phone directories and door knocking. So it was a difficult path to get to owners. And now, of course, everything is really advanced and we're trying to stay ahead of it.
Right. Well, and every time that I'm with the brokers in a meeting with you or in some of the other offices, Texas, Tennessee, around the country, I am absolutely amazed by the amount of technology that land advisors have, and the ability to add on layers, take apart layers, peel back the layers to show all of the data that is available. How is that helping to transform the land advisors to be heroes to the consumers of land in their decisions?
Land is peculiar. It's the most peculiar asset class that there is. Many would say a flat piece of land is the least complicated. In fact, it's the most complicated.
Yeah.
So one is being able to step through that. Information and data and mapping technology is very important to our business. The spatial display of multiple layers of data. We spend about $1 million a year just on subscriptions. And so that being able to be fed into one system that our advisors are able to utilize to, one, give their perspective, which is probably the most important thing. You take all of this disparate data that exists in multiple databases of information if you had it, but having it all in one place and being able to layer things out, it's very helpful. But as or more important is understanding and perspective. So this accelerates their understanding and perspective, but then it comes back to the relationships with landowners, with developers, with cities, with other service providers. That's really the I would say the, if you want to call it secret sauce, but it's really the melding all that together under a roof with a network across the country is really, I believe, what's led to a lot of our success.
Yeah, yeah. No, it's absolutely amazing. And to our listeners, if you get a chance to participate in one of the presentations put on by the Land Advisor advisors, I really encourage you uh, to pay attention and just look at all of the information that's available and that's tracked by Land Advisors. So, with all the information we do have available to us, Greg, and our clients, yeah, we're in this place right now where land prices remain relatively high. We have labor costs uh, very high, material costs high, financing's difficult to get. How are deals getting done right now? And is there anything you'd like to share? I'm sure some markets are a little different than others, but what is the environment you're currently seeing as we're coming into the end of the first quarter 2025?
Well, I could go from kind of hardest or non-existent to the easiest
Hmm.
related to the path to closing. Industrial and multifamily merchant build is very low pulse right now. The spreads are too difficult to make anything work, especially exit cap rates to start with, let alone borrowing costs.
Yep.
You mentioned the high costs of doing business. We also have some soft nature and pockets related to overbuilding. So a lot of that has been very subdued. As we move up the chain, we're seeing a lot of retail land closings and interest in retail. You know, it was beat up for so long, it was underbuilt for so long. And with all the growth we have experienced, we are seeing quite a bit of retail
Mm.
land activity. So that's on the plus side. The next, and really moving up the food chain, is larger land holdings that are being sold as a store of wealth. In that case, we're not really having to do all of the financial maneuverings, all of the underwriting, all the investment committee approvals, all of the things that get to lot bankers, land bankers will get to in a second, but it's just a store of wealth. And that's still happening. We have hundreds of millions of dollars of land trading annually that is in that category of somebody buying out in the future path of growth for whatever reasons they may have. And that's not simplistic. It requires a lot of explanation, a lot of speculation as to what the outcome may be. But when you're looking at a 5 to 30-year investment cycle, you can, you could be wrong by a number of years and still have a really good deal. As we move up to master plan communities, where we spend a lot of our time, we've traded 65 different projects across the country, working towards 70 that are large greenfield startups of 1,000+ acre projects, to what we've especially become specialists at, which is selling master plan communities that are midstream. So they've got absorption, they've got maybe hundreds or thousands of homes on the ground, and for whatever reason, the parties need to recap and or decide to take advantage and do a disposition. So we've done a lot of those. The other, of course, is the home builders, voracious demand. And this has been the sweet spot because industrial and multifamily, other forms of merchant building, income property in general, office, still the disaster, the falling knife, you might call it. There's not a lot of places to invest. So what are these areas? It's land and housing for sale housing. It is lot banking and land banking, which is helping facilitate a tremendous amount of our transactions, the land light theory.
Mhm.
And data centers, if you could be the lucky guy with some power, which is quickly disappearing. So that's been another shot in the arm to the land economy is data centers, battery storage, and those kinds
Right.
of energy related projects. Lastly, I just mentioned while I'm on that is solar. And we've got thousands and thousands of acres that are under option or going toward closing. But quite frankly, with the new administration, we're very concerned as to what incentives, fundings, financings, and mechanisms will still be in play to make those deals work.
And Greg, you brought up a couple things I'd just like to dig down a little further. So if somebody comes to you and land advisors and say, hey, we have an early stage, we're just getting going, we've planned, we've entitled this land, let's call it 1,000 acres. And it's early stage, meaning we haven't even put in any infrastructure. Maybe we've got some in. What is the biggest challenge you have in representing that piece of property vis-a-vis one that is mid-stage? And what are the challenges and opportunities for both of those different types of product, albeit they're still master plan communities, just in different stages?
So the obvious challenge is the cost to turn on any of these communities. And if we look at somebody who has, a level of offsites that exist, meaning they could get to a sewer plant that has capacity, which is growing rarer and rarer. They have a water campus to treat any water. They have a source for water. And they're just dealing with your typical perimeter roads and entry monuments and first round of lots and an amenity. Those projects at the low end are $20 to $30 million to turn the lights on. The more common circumstance is you're not having these items I mentioned, and you're having to really greenfield build. It could be an offsite parkway, an interchange, a new wastewater treatment plant, or a temporary plant, which will then be converted to one, and all the other things you need. Now you're really looking at a ticket that is no less than 40 million to as much as $100 million that you would need to expend for a large scale master plan community. And I mean, this is a direct softball back to you, Carter, but
Yeah.
gosh, if I had that piece of land and I didn't have funding or financing, how would I handle it? So
Yeah.
I'll say from our perspective before you go is that the liquidity that's been brought to land in recent years through this massive industry around lot banking and land banking has arrived, and I would say just in time. So the builders have gone to a land light scenario, but it also works very well for the master developer that all the capex required to put 600 finished lots on the ground does not need to be expended by them. They contract with builders, the builders have lot bankers, and voila, you have your first phase activated without having to shell out as much. But again, you're still having to deal with all of the offsite infrastructure, and that's where district financing that you specialize in so well has really very critical to equation.
Well, and the other thing, and that we're seeing, whether it's early stage, mid stage, where and now they're triggering some of their conditions of approval to add, additional infrastructure because traffic counts have gotten so high, they've used up all the wastewater capacity, water capacity, interchanges are being triggered. But we are currently working with a number of your advisors right now. Literally, we've got meetings with jurisdictions on Wednesday where one project cannot handle the infrastructure, period. And what Land Advisors is doing is bringing all of these landowners together to approach the jurisdictions in a manner that it solves their problems. But as part of that, the cities are also asking for some of their problems to be solved as well. And I don't know anybody that does it as well as you and your team to bring those landowners together because you know them all and you have those deep ties with the jurisdictions. But that's where we're at right now. And it's not only in the Southwest, but it's a lot of different places. How do we solve these huge infrastructure burdens together? And I've got to say that's part of your secret sauce.
Well, it's the trend. It's the difference between what you might call a traditional land broker, and truly, we don't like the word broker. We like the word advisor. We don't like the word deal. We like the word project. So we think about these very complex situations that can take years to resolve. it may have been that among that group of owners, there was probably one-off deals attempting to be done for years, and each one couldn't solve the problem on their own.
Right.
So therefore, joining together, formation of a district, getting a developer that could now underwrite, you now have something that can happen. It's unlocking
Yeah.
land's potential that you and I work on together constantly.
Yeah. And so for these early stage transactions, what I'm hearing, if I can paraphrase, there has to be a path of infrastructure, and you have to be able to demonstrate what that path is, how achievable it is, and what that cost is.
Yeah, so it's
And,
all underwriting, and
yep.
it's being done to the T that you have to describe a viable return, and that return for the home builders, typically the rule of 40, for those of you who don't know, is a 20% margin and a 20% IRR.
Mm-hmm.
We're now starting to see that formula weight more toward kind of return on assets, return on investment that is maybe uh, rising quickly as a factor. But in any case, the ability to turn on these big projects requires multiple financial formulas to all come in sync at once. And that includes potentially a lender, a traditional lender, a district, and people's understanding of the district, lot banking and land banking, all of these features, and of course, equity that the developer has in their pocket, or in many cases, we're raising through our Land Advisors Capital Group too.
Yep. Well, and you've talked about this, and I'm glad you brought it up, though. What's going on with the builders right now? We just saw Lennar offload all their land to Millrose, their lot banker. Could you explain the concept of land/lot banking just generally for our audience that may not be familiar with the structure and why it's important? And then I'm gonna dig down from there, Greg.
Sure. So, lot bank's been around for a long time. It used to be very much a bunch of local investors that might engage in that. There was a group back in the 90s here, Acacia Capital. They were the first really to break into the institutional, Hearthstone and others of the like that did touch into the Resmark, into institutional capital. And that was the beginnings of a complete and incredibly expanded industry. So you mentioned Millrose, which might be the pinnacle of, creativity and forward thinking by Lennar. It is a REIT
Mhm.
structure, and obviously looks like it's going to be highly successful. But beyond that, you have 5 or so lot bankers that are, tops of their game right now, and they're doing an incredible amount of work for the top public home builders, some of the larger privates. So that's the institutional side where billions and billions has been placed each year for the past, now 5 years, and it's growing.
Mhm.
So that movement to land light strategy has created an industry. As you go below that, though, in terms of the private builder, the medium size, maybe smaller private builder all across America, again, they've needed to go land light because of the pullback from the regional banks,
Mhm.
that they're forced to deal with private capital, and quite frankly, also maybe more risk averse. So they are using lot banking as a tool. The typical terms are a 10 to 20% deposit that occurs, and then an agreement to take so many lots per month or per quarter
Mhm.
that would amortize the investment and provide at the low end big institutional investor with big builder could be hugging 11%. The private builder world, it could be hitting, 14%. And
Mhm.
you could get more creative too with a private builder that is got maybe more latitude and flexibility to structure things that aren't just in a perfect box
Yeah.
that you get more creative. But it
And
is really important to the industry, and it's exploding.
yeah, how do you and the other advisors uh, interface between the builders, the sellers, the land and lot bankers in a transaction typically, Greg?
Well, many times the settlement statement just changes from what was the home builder buyer as contracted, and it turns
Mhm.
out to be XYZ institutional lot banker, and they come in to close the deal. So many of the times we are not really arranging that. Most of the time we aren't, especially where it is the public builders. They have their 2 or 3 solid lot bankers. They've got their
Mhm.
paperwork already done and negotiated with them. It's insert new map, insert new lot quantities. I mean, a lot of this stuff is quite perfunctory after the first few deals. So when you get to the private side, then it may be that the only way this deal does close is because a lot banker is coming to the table, and
Right.
we are arranging for a multitude of those types of transactions. One other thing, it could be that the private builder already owns lots. They are
Mhm.
already open, they're already selling, but now they have to take advantage of another land takedown. So they want to take these lots off their books so they
Mhm.
could have opportunity money to go forward with, or they're being told by their bank to say, hey, you've got a line with us, but we're curtailing that line. We're not calling it all, but we're curtailing it. So as you sell off, we're not going to be providing you new credit. In those cases, again, curtailing risk, curtailing debt, lot banking is a great way to do that.
Yeah. And when you're dealing with the privates and the publics are kind of their own animal with what they have, but to the extent we're dealing with, that land advisors is involved in a project of land and lot banking, what are some of the more uh, I shouldn't say contentious, but the more important deal points that you end up negotiating over and over again? I know when we're dealing with various cities in different parts of the country, we always run down to the same three deal points, if I can, be really succinct. Uh,
So I think, look, it's obviously the rate
mhm,
and what kind of return the builder is willing to provide to the lot banker and what kind of constraints the lot banker has in order to have any latitude or flexibility. So in the end, it's generally kind of what rate of return.
mhm,
The other factors that are probably more concerning or even problematic occurs when there's long construction delays. And is this a current pay or is it an accrual?
mhm.
If a builder's only putting 15% down and the cost of the capital is 14%, and you have a year and a half delay in delivering something, you can understand how behind the eight ball you could get pretty quickly. So when you're dealing with a 18 to 36 kind of month duration, missing something by a year is a
Mhm. Yeah.
complete you know blowout factor related to what could occur. That's usually post the closing, right? Because
Right.
you already taken down the land. You just have delays in final approval of something, or more likely, as of late, it's really construction delay.
And there has been in the news, I'm gonna just switch to a national scale, and thanks for that, Greg. There always has been at least discussion of a supply imbalance between demand and lots. I was reading in the Wall Street Journal today where inventories of resale homes are starting to tick up primarily in Florida and in Texas. What do you see as you look out over the national landscape as it relates to delivering, and let's just keep it in the residential realm, finished lots to public-private builders in an efficient manner? Are you seeing any trends that the audience should be aware of, or anything that causes you pause?
Well, I think, always looking at months of supply of VDLs, and that's a really good place where Zonda comes in. They do a really nice job of
Mhm.
driving areas, and as the future goes, satellite imagery and things like that that'll really begin to give us real-time numbers on lot finishing. But right now, across the country, we're just slightly below what might be considered a fair supply. That's
Mhm.
countrywide. A fair supply would likely be 22 to 24 months. That's different depending on the geography you're in too, but just
Mhm.
generally speaking, and most areas are still running between, high teens to very low 20s, so 18 to 21
Yeah.
months. There's a couple areas popping above that. The other factor we need to understand is as rates go up and demand curtails a little bit. I could use Phoenix as an example where there's a pullback in permits. All of a sudden, that VDL months of supply goes way up because they're
Mhm.
using kind of the past year. And as you begin to see a quarter decline, you could see months of supply go up by, 3 months over the fact that the permits slowed at a specific point because of something. Some of it could be seasonality too. So you just got to be careful and look at it. But generally speaking, we are slightly undersupplied across the
Okay.
U.S. Certain
Mhm.
pockets, as every
Mhm.
market has, not just the market, you've got submarkets, and certain submarkets probably have a greater supply than would fit into that category of being short.
Mhm.
But
Mhm.
right now, I'd say very well balanced.
Yeah. Great. Great.
But to stay ahead of it and keep that balance is the trick.
Yeah.
And that's not easy.
How is the new administration impacting the land business in your view? I mean,
Well, we've been in such a whipsaw with waters of the U.S., the 404
yeah.
permitting. So, any reduction in regulations would be a good thing as viewed by the builder, the
Yeah.
developer, the folks that are in the industry. And I think less regulation is going to be good. I was speaking to somebody this morning and talking about efficiencies in government, and while it's being really magnified at the top end and maybe not on the most important things, but really using as examples some of the inefficiencies. I was saying this morning how I think that's really going to be quickly moving to the state and
Mhm.
local level.
Yeah.
And I think efficiency is probably going to be the word of the decade, either from a political stump speech to actual practices on the ground. You always have cities with horrible reputations of processing
Mhm.
things that they just are terribly slow. It's 5 turnarounds before you could get to approvals, a
Yeah.
lack of response, slow response. So I do think efficiency is going to be maybe the strategy and the word of the decade to upgrade the processes we go through.
Yeah.
So I think that's really a factor. Again, reduced regulation, whether it be federal or maybe that even coming to the state level, is all there. The other is the big mantra around attainable housing. I've never heard it more from public officials
Yeah.
that that's even in their mind. It used to be, we don't want any lots less than 60 feet. We don't want those people
Yep.
living on small lots or, God forbid, apartments or townhomes in our community.
Yeah.
So that talk has really changed when their kids and grandkids uh, can't afford to live near them,
Yeah.
and I think that factor is really uh, going to be big related to the desire to see housing in your community. However, some of it's gone maybe too far where they're taking out of the hands of the local jurisdictions their own land use decisions. And we've had some of those laws passed here in Arizona. It's happening in other states
Yep.
that by right you can convert commercial to, 4 stories of apartments, those kinds of things that neighbors are not real happy about. And that may see some whiplash.
Yeah. Yeah. And I agree with you.
Oh,
I think
Carter,
there's
one more thing. It's so obvious.
yep.
I'm sorry I
Yeah.
missed immigration. uh,
Yeah.
with the new administration. And so, we had a record number of people over the past few years come to our country, whether it was legal or illegal. The the idea of it being shut off is problematic
Mhm.
for our country. I think we all realize that. I think the current administration realizes that. So, however, the next year or two go, and if immigration can be fixed to streamline it, both for the very well educated here in the US that get to stay, but as important, I would argue, or maybe even more important, is that we have labor to build things, to process
Yeah.
things, our food supplies, our construction, inflation, everything is banking on having available labor, and
Yeah.
we're going to need it.
Absolutely. And Greg, you've been really uh, active in obviously Land Advisors corporate offices in Scottsdale. Been very active in working with the jurisdictions, with the state, with the governor's office in matters of water. And I know there's a lot of information floating around in publications which may or may not be accurate. What do you see as it relates to water? And is that something you feel comfortable talking about as it
Um,
relates to, you're on the ground in these conversations?
my Tourette's may break out here. So I'll try to be cautious. Is this a PG
Yeah.
podcast?
So
Um,
we,
look,
we like to be real. Yeah.
Look, Arizona. has plenty of water. 72% of our water usage is used for irrigating crops. Some are really, really important, and others may be able to move to other geographies. But that says it all right there, that we have a huge water bank and curtailing what has been used for farming. We're using the same amount of water as we did in 1952. You know, we had a couple 100,000 people here, then a few 100,000 people, and now we have 5.4 million in the Phoenix region, right? And we're using less water. So it speaks to how much water is either being wasted through poor irrigating techniques and little conservation, to the fact that amortizing our farm around to the subdivisions uses about a quarter to a fifth of the water that farming does. So that's factor one. Two, we had a water study done, and unfortunately, it was brought out to the planet, global news, that it showed we were 4% short on water in the Phoenix region over 100 years. 4% short, as if they could calculate that. A new study was published that says we're now, from the department's perspective, we are 2% short on water, yet a moratorium has occurred within what is called undesignated areas. So we could spend another full hour on this, but in the end, there's a lot of bills being produced by our legislature. 100 last session, about 100 this session, most vetoed. Very few things got through. We've been negotiating an ag to urban bill, which looks like it's failing miserably right now, with trying to get the conversion rate to 1 unit for every acre of farmland that's retired, which is using 5 times as much water as that. So there's just the bargaining has all kind of, it seems to me, has really begun to fall apart. The recognition that the study is a complete and total fail. It has so many assumptions in it that I could go through for the next hour that I think are unrealistic. They're not carrying forward the current water usage. It's historic usage, not current usage, which is conservation minded. Well placement in their study was poorly done. A lot of that's being fixed now. But in the end, we don't have a water problem. We have a political problem.
Yeah.
And hopefully we'll get through it. And I hope we can get through it quickly, because Arizona has water and the world needs to know it.
Yep. Yep. Thanks for that, Greg. And maybe we'll have a drill down on water law and the water studies. Uh, is there anything that it keeps you up at night, Greg, related to, I mean, you've got a big operation. We both want to be heroes to the same folks, the consumers of land, be those investors, master plan developers, residential. I mean, that's my world. I know you have other clients. But is there anything that causes you concern as you look forward or keeps you up at night?
Well, look, the higher rates for longer is a real problem for everyone. So it's not keeping me up at night, but it surely is a problem. It breeds opportunity too.
Yeah.
So we always, Carter, you and I always look at that. If there's a problem, how can we help? But the higher for longer is really affecting a lot of people in a really negative way. And so I'd say maybe it's keeping more of them up at night. That's a factor. I think government is really we'll call it the opportunity and the problem. And when we see things like water laws being affected and water regulations that are affecting so many people from being able to buy an attainable home, I think it's factors like that. I am worried about politics in general more than I ever have. Just the discontent that has been bred, and we can all come at it from different ends here. But the end, we all want to get along. We all want, as you always say, we want government to work at the speed of business, which I think would be great, whether it's processing new CFDs or MUDs, to the idea of approval processes. So time kills all deals, we say all the time, and government is one of the things that's less efficient in the process. It costs money, it costs transactions, but in the end, it costs the consumer more.
Right.
So, that's a factor there. And then geopolitical, I don't worry about those kinds of things. We do have weather changes, which, we need to adapt, whether it's a little more heat in the summer here or it's a little too much water in other areas. Insurance is another area that is really impacting the ability to not only have an attainable home and afford it, but it's also
Yeah.
really affecting a lot of existing residences and HOAs. And so insurance is a problem of the decade. I think it's been horribly mispriced. I think there's a great opportunity there. But people without fire danger are paying for those with
Yeah.
extreme fire danger. Those
Yeah.
that aren't subject to flooding and never have flooded are paying for those who have been flooded. And I think that the broad brush approach that insurance is using to price it is way off. So
Yeah.
that's not the laundry list of things keeping you up at night. I think it's more of what's keeping the industry up at night.
Yeah. Yeah. Exactly. Then conversely, what is the thing that's really exciting you that you see huge opportunities? Be that for our clients, be that, for those that work with our clients, and anything that uh, gets you excited and that you look forward to
Well,
helping seize those opportunities.
we've invested heavily in technology, and we
Mhm.
continue to do that. It used to be a whole lot of money got a little bit done, and you just had to keep staying ahead of the curve. Now, with a little bit of money, a lot can be done.
Yeah.
And so, as we are exploring the opportunities with I just saw an example of what we are able to do here at scale this
Hmm.
past week. It was pretty amazing, and I think that trend and the speed at which we are going to evolve related to what can make this very peculiar asset class less peculiar.
Yeah.
Whether it is the ability to lend against a property in an instant, to the idea that you can understand all the parameters around a property at a single point on earth, with every variable that you would like to select being available at your fingertips is really, it's truly exciting. It's a little scary too,
Yeah.
as our competitors are more armed with, better tools, although they're disparate and they're in different places. We've got to stay ahead of it, and we're
Yeah.
spending millions of dollars to just do that.
Yeah. No, Greg, that's awesome. Are there any questions that you'd like, or any questions that I should have asked that I didn't, that you'd like to address before we sign off? I really appreciate your time.
Yeah, thank you. I just didn't really expand on the opportunities. I just mentioned technology and AI.
Yeah.
Truly, it is this land and housing business that we've been a part of for so long,
Yeah.
Carter, that has turned into such a large set of very close relationships for you
Yeah.
and I.
Hmm.
So when you're starting off in business and you're introducing yourself to people, it's a long road. It's a
It
multi-decade
is.
road. And now we're sitting in a position, both of us with the national platforms, that would be of such, extreme value to more and
Yeah.
more people. And however, as you always use the term, how we could be a hero to the landowner, the consumer of land. It's been a really exciting time. So I just see a great opportunity in land and housing,
Yeah.
and the capital side of our business is really exploding too. So really excited for the future. And Carter, always appreciate your podcast, and especially appreciate you having me on from time to time.
Yeah. No, my pleasure. And thanks for being on. And the other thing I'd just like to say is, given the politics that we see going on and looking at the efficiencies that are, if I can use that term, being forced upon some institutions that may not have been as efficient as they could be, whether they were or they weren't, somebody else is going to determine that. But I think we really have an opportunity to reset between the public and private sectors. We all have some of the same issues, meaning how are we going to continue to put infrastructure? And I'm just speaking for my little area, but also that impacts yours and all of our listeners. How are we going to be able to come together to solve some of these big infrastructure issues to allow our areas and our economies to continue to grow and be able to continually deliver excellent communities for the end users. And
Couldn't agree with you
let's
more.
hopefully we take advantage of it, all of us. And
Infrastructure is going to be just
yeah,
the top of mind for everybody, and efficiencies in delivering it is really key. So,
yep,
yeah,
absolutely.
glad to join you, Carter. Have a great day.
Hey, Greg, thanks for joining. Appreciate it. See ya.
You have been listening to the Land to Lots podcast with Carter Froelich. Follow us wherever you find your podcast to never miss a new episode.